The local stock exchange is to get a new name on its main board when tech firm Blackpearl Group joins via a direct listing later this week. The company's chief executive Nick Lissette and its chair Tim Crown join me in the studio. Thank you to you both for coming in.
Thanks for having us.
Well, to get us started, Nick, could you explain what the company you founded back in 2012 actually does?
Well, Blackpearl Group, it's an exciting hybrid of a SaaS technology company and an acquisition platform. So it's a little bit of both. Yeah, if you think about small businesses in the world today, the challenge they've got is new revenue and acquiring businesses where the cost of acquisition is so high, and typically you have to resort to pay-to-play platforms, and the costs of them are increasing, effectiveness decreasing. So when we think about our company and our group and where we fit in, the technologies within our group focus on transforming everyday business tools, and we specifically focus initially in email and transform into digital marketing tools so people can counteract that increasing costs of customer acquisition.
So why are you turning to the public markets? You've got offshore backers. Why not continue down that route?
What we've really got is a platform that we can build from. One of the things having public stock is when we go to acquire businesses, we don't have to put it all in cash. We can, in essence, do a combination of cash and stock to the acquired company. What that makes it so good for us is the fact that acquired company's management team is now vested in our success over the long term, not just a quick cash sale and they can go out to the next thing. This is one of the reasons why we want to have that ability to have public stock to use for acquisitions.
I guess the question of timing comes to mind. It hasn't necessarily been a good year for public markets with rising inflation, rising interest rates, and also the war in Ukraine. So why now? Why now? Why go ahead with the listing now?
That is the reason. So has there been a better time to buy private technology companies than now? Right. I mean, if you think the access to capital that these companies had historically, that's been heavily restricted. You've got ever-increasing changing technology landscape, which you have to heavily invest into R&D to kind of keep up, let alone grow in. And you know what? It's a global recession. So what does that equal? You've got companies that may have not entertained selling that are now at lower valuations that are very receptive to receiving, a phone call and entertaining the prospect of being acquired either fully or in part and becoming part of the Blackpearl Group.
Have the taps been turned off for some of those players in the market that you're maybe looking to acquire or invest in terms of the flow of capital to them?
Yeah, I think you had some really interesting views on that.
If you look kind of from the start of COVID, all the governments in the world, in the Western world, flooded tremendous amounts of stimulus, tremendous amounts of money supply into the system. There was, in essence, overinvestment, especially in startups and new technologies. Well, with the pullback, there's now an underinvestment. There's no follow-on financing. Where do these orphan companies go? 1, 5, 10 million a year in revenue. They've been burning cash. They've been looking for growth. All of a sudden, the spigot has been turned off. So now where do they go? What do they do? How do they motivate their teams? What's next? That's where Blackpearl comes in to pick among a large number of firms which companies fit financially, operationally, customer targets, culturally. How do we make this entire machine work together? And we think that this is a great time. The other one is that we're not sellers. We're not selling any stock. We're actually going to buy companies with it. So from our point of view, timing couldn't be better than right now.
I'm interested to know why you're listing on the New Zealand market as opposed to something like the ASX. Traditionally, people have said it's a market that has a better understanding of technology firms. So why look to New Zealand?
Am I up again, or you want to go?
Well, I mean, again, if you're not raising capital like you're doing a direct listing, the NZX is a very low-cost way of actually getting onto an exchange. And once again, that's our primary reason is through acquisition. So yeah, I mean, really, that's the answer to it. And as we grow, we can look at other options. But it's a great start point.
Yeah. Okay. So as you sort of mentioned, direct listing, not looking to raise capital at the moment. Is that something you're thinking about on the horizon?
The raising capital?
Yeah.
Look, absolutely. As these opportunities come up, and whilst paying shares is great. If you keep paying too many shares over time, well, that creates, dilution, and sooner or later that's going to affect your, your dividend payout strategy in the future. So getting the right balance of cash and shares is important, and so we'll always want to be looking at options, as these acquisition opportunities come to fruition.
Are you working towards a timeline on raising capital, or is it something you're just going to play by ear?
There is an opportunity for us to look quite soon after listing. It would be around a private placement if we're going down that path, and again, that's sort of based on acquisition opportunities that we're eyeballing.
Look, the acquisition opportunities come up a lot in our brief conversation. What are you looking at the moment? I'm sure you're not going to name names, but what are the types of firms you're interested in at the moment?
I can get quite specific because we've actually just completed an acquisition before listing. So it's been a busy month acquiring a company and listing on the NZX in the same 30-day period. So New Old Stamp were the company that we purchased, and they are one of the world leaders in email signature branding. So a great company. I mean, they have amazing people within it to start with. They had $1.2 million annual recurring revenue, tremendous marketing assets, so over 1 million organic site visits annually, which is just gold in our industry. And really importantly, and this is the thing, we have talked a lot about growth via acquisition, but our preference is growth organically. So actually acquiring businesses to accelerate organic growth, as weird as that sounds. So again, if you look at like New Old Stamp, they're in the same sort of broad tent as the product we've built ourselves, Blackpearl Mail. And so there's tremendous cross-sell and upsell opportunities, sharing of resourcing, diverting marketing funds from Blackpearl to New Old Stamp to convert more of those million organic site visits. So it creates a huge opportunity for organic growth. So as we look forward to other businesses that we're looking to acquire, we've got a 3-horizon strategy, and the first one's underway, demonstrated by New Old Stamp. So it's first generation email signature and branding, and the reason why we want to hunt them out. One that they're typically between sort of 750 and 1.5 million in annual recurring revenue. Mostly they get up to around that point and start flattening out, so they're receptive to conversation. We understand that code base really well. We understand that market really well, and we get great organic growth synergies. As we move forward, Tim's indicated about the amount of orphan stocks. That was the orphan tech companies. Orphan tech companies. That's it. Great name for it.
They need a home.
They need a home. Yeah, we're a great home for them. And
the orphanage is getting big, is it?
Exactly. Yeah. New rooms, are welcome. So. Yeah, we look at things that are not so specific to the email space at that stage, and our underlying technology that our built product and now New Old Stamp reside on, it's not just specific to email. It actually can handle a broader remit of digital communication.
Are you looking much at your own sort of internal product expansion, or is it more towards the acquisition sort of view?
I think it's more towards the acquisition view. There's always going to be opportunities to build and refine new products and features. And one of the great things about acquiring offshore businesses, you get access to offshore resourcing, which can really condense down your R&D time and actually do it in more affordable than perhaps if you're just doing the building out in New Zealand. So I think the answer is always a blend. And again, if you look at like new assets that get brought into the company, there's always great opportunities at, I call it wiring things together, but creating sort of synergistic R&D to really maximise that organic growth. So I guess the answer is a little bit of both.
You've had some big name investors pump some money into the company. How did you manage to attract them?
Yeah, well, we wanted to get global from day one. I know it's a cliche, and everyone's like, "Oh, we're going to get global from day one and out in New Zealand." And so, we wanted to do that, and we walked the talk. So really, the sort of big foundation investor we got was Tim, and I didn't know Tim I literally just headed off to the States to look for a business partner and investor in equal terms. Very fortunate to get an introduction to Tim, and here we are today. And when you get someone of Tim's integrity, that really makes things a lot easier from a capital perspective. And so we got a little roll on in getting both great US investors and local investors here. So the support's been tremendous. So on one side, you've got the integrity. On the other side, we hit a lot of exciting points. I mean, it's SaaS, and when you're on the right side of that model, there's very few better business models. We've got a data element, there's acquisitions, great technology, it's a combination of a lot of exciting elements, and I guess that, that attracts people.
Well, I think one thing is the world is globalized in terms of technology. It's in many ways, on the very large companies, it may be US-centric, but there's software companies all over the world. And as Nick mentioned, the software as a service business model is the best business model I've personally ever been involved with. And I think it's just a great way. Like with Blackpearl, you've got 97, 98% of the customers return every year. So you don't have to go resell the same customers to go get new business. They just kind of come along for the ride. So growing the business is much easier than a traditional model. The other one is I look for great leadership. I look for passion, people that are committed to success, and that's what I saw in Nick and the team. The actual technology is important, but it's really the leadership team first. The second is the technology and what we're going to go to market with, because in 5 years, it'll be a different programming language, different product offering, et cetera. Okay, that's just part of the game that we go with. So when I saw Nick and the team, I said, this is somebody I want to get behind. And over time, we've invested more capital as they've hit critical milestones of growth, product, et cetera. So I'm very excited about the opportunity in front of us.